Canada is grappling with a significant economic challenge: the rising cost of living. Many Canadians feel this pressure intensely, especially in 2025. Financial strain is a daily reality for countless families and individuals. Soaring housing costs and everyday expenses burden household budgets. Wage growth hasn't kept pace, widening the financial gap. This economic squeeze tightens its grip with each passing month. The problem affects people from all walks of life. It demands careful examination and open discussion. The focus on 2025 is deliberate, marking a convergence of economic trends. Long-term issues have now come to a head, creating acute pressures. The financial landscape in 2025 reflects these developments. This year serves as a crucial lens for examining the crisis. Many Canadians are actively seeking answers and meaningful relief. Toronto, Canada's largest city, faces immense pressure on its resources. Housing is a significant concern for many residents. The average net salary in Toronto is about $5,300 per month. However, high living costs stretch this income thin. Monthly expenses for a single person average around $4,153. Rent for a one-bedroom apartment is typically $1,813. Housing alone can consume over one-third of an average salary. Other costs like groceries, utilities, and transit add to the financial load. After all expenses, a Toronto resident might have $1,147 left. This narrow margin creates a precarious financial situation. Building substantial savings or investing for the future is difficult. The high cost of living impacts the quality of life. It limits opportunities for leisure, personal development, and financial security. Toronto's economic reality in 2025 is challenging for many. Understanding Toronto's economic landscape is key to grasping the national crisis. The dream of comfortable city living faces serious financial hurdles. The struggle to maintain financial stability is a common experience. Vancouver, renowned for its beauty, faces high living costs. The average net salary in Vancouver is about $5,945 per month. However, high expenses quickly offset this income. Monthly expenses for a single person average around $4,361. Rent for a one-bedroom apartment is typically $2,000. Housing costs consume around 33% of a person's net salary. Other necessities like food, transportation, and utilities are also costly. After all expenses, a Vancouver resident might have $1,584 left. This sum must cover savings, discretionary spending, and unforeseen circumstances. The high cost of essentials limits financial freedom. Building a secure financial future is a constant uphill battle. Vancouver's allure is undeniable, but its economic demands are formidable. The struggle to make ends meet is very real. The purchasing power of earnings is significantly eroded by high prices. This reality requires careful budgeting and financial planning. Vancouverites face economic pressures that shape their everyday lives. The city's stunning natural setting contrasts sharply with daily financial struggles. Calgary, known for its energy sector, faces rising living costs. The average net salary in Calgary is about $4,472 per month. Monthly expenses for a single person average around $3,725. Rent for a one-bedroom apartment is typically $1,958. Housing costs consume over 43% of the average net salary. After all expenses, a Calgarian might have $747 left. This tight margin underscores the financial strain experienced by many. Despite lower overall expenses, housing presents a major challenge. Calgary's affordability advantage is eroding. The cost of living has been rising, putting pressure on household budgets. Residents are increasingly feeling the squeeze of higher expenses. This shift is changing perceptions of life in this major prairie city. The adequacy of the average salary is being tested more rigorously. Many Calgarians find their paychecks do not go as far. The high rent significantly impacts overall affordability. Building substantial savings or investing for the future is difficult. Calgary's economic reality in 2025 is challenging for many. Comparing Toronto, Vancouver, and Calgary reveals shared economic pressures. Vancouver has the highest average net salary at $5,945 per month. Toronto follows with $5,300, and Calgary has the lowest at $4,472. However, higher salaries do not automatically translate to greater financial ease. Vancouver also has the highest average monthly expenses at $4,361. Toronto's expenses are slightly lower at $4,153, and Calgary's are the lowest at $3,725. Housing is a primary driver of financial strain in all three cities. Rent for a one-bedroom apartment is highest in Vancouver at $2,000. Calgary follows closely with $1,958, and Toronto's average rent is $1,813. After all expenses, Vancouver residents have the most disposable income at $1,584. Toronto residents have $1,147, and Calgarians have the least at $747. This limited discretionary fund impacts savings potential and quality of life. The dream of financial security feels distant for many urban Canadians. Canada has long maintained a reputation as a welcoming nation for immigrants. Immigration has been a cornerstone of the country's population growth and economic development. Newcomers have contributed significantly to building Canada's diverse cultural fabric. In recent years, Canada has seen substantial numbers of new arrivals. These include permanent residents and temporary residents like international students and temporary foreign workers. The federal government had set ambitious immigration targets to address demographic shifts and labor market needs. The scale of this intake has led to rapid demographic changes in several regions. A significant component of this recent influx has been international students. In 2024, Canada hosted nearly 1 million international students. These students contribute billions to the economy through tuition fees and living expenses. However, the volume of international students has led to growing concerns about infrastructure and social services. Housing availability and affordability have become critical issues. In response, the government has recently implemented changes. Study permit approvals saw a significant decrease from 2023 to 2024. This policy shift aims to manage the intake more sustainably. The goal is to align the number of temporary residents with Canada's capacity to accommodate them. The arrival of a large number of immigrants and international students directly impacts housing markets. An increase in population naturally leads to a greater demand for places to live. This is a fundamental principle of supply and demand economics. When housing supply does not grow at the same pace as population growth, prices tend to rise. This increased demand is not evenly distributed across the country. It is most intensely felt in major urban centers. These cities are often the primary destinations for newcomers seeking education, employment, and community connections. The existing housing stock in these areas faces immense pressure. This surge in demand exacerbates pre-existing housing shortages in many Canadian cities. For years, the pace of new home construction has struggled to keep up with population needs. Various factors contribute to this, including zoning regulations, labor shortages in construction, and material costs. The influx of new residents adds another layer to this complex problem. Rental markets in particular feel the immediate impact. Increased competition for available rental units drives up monthly rents. It also leads to lower vacancy rates, making it harder for everyone to find suitable accommodation. This situation creates a very challenging environment for renters. Urban centers like Toronto, Vancouver, and even rapidly growing cities like Calgary bear the brunt of this housing pressure. New immigrants and international students are often drawn to these metropolitan areas. They offer more academic institutions, diverse job opportunities, and established cultural communities. This concentration of new arrivals in specific geographic locations intensifies the competition for limited housing. As shown in Part 2, these cities already faced high housing costs. The additional demand from newcomers further strains the affordability for both long-term residents and those newly arrived. The dream of living in a major Canadian city becomes more difficult to achieve. The types of housing most affected are varied but significant. There is an acute shortage of purpose-built student housing in many university towns and cities. This forces students to compete in the general rental market. the demand for rental apartments, especially 1- and 2-bedroom units, has skyrocketed. This pushes prices beyond the reach of many individuals and families. Even the market for entry-level homes for purchase becomes more competitive. This ripple effect means that the housing crisis impacts a broad spectrum of the population. It is not just newcomers who struggle, but also existing residents trying to manage rising shelter costs. Immigration is widely recognized for its positive contributions to Canada's economy. Newcomers often fill crucial labor shortages in various industries across the country. They bring diverse skills, experiences, and entrepreneurial spirit, frequently starting new businesses. This can lead to job creation and innovation within the Canadian market. Immigrants contribute to the tax base, helping to fund public services that benefit all Canadians. Over the long term, immigration is seen as a vital component for maintaining economic growth. It also helps in sustaining Canada's social programs in the face of an aging domestic population. These benefits are a key reason for Canada's pro-immigration stance. However, the rapid arrival of a large number of people can place immediate strain on public services. This pressure extends beyond just the housing market, which is a critical concern. Increased demand can be felt in healthcare services, leading to longer wait times. Public transportation systems may become more crowded and require expansion. Schools and social support services also need to adapt to a growing and more diverse population. Adequate planning and investment in these areas are crucial. Without them, the quality and accessibility of these essential services can decline. This can affect the integration experience for newcomers and the quality of life for all residents. Upon arrival, many immigrants and international students face initial integration challenges. One of the most significant is securing employment that matches their qualifications and experience. While Part 4 will delve deeper into labor market dynamics, it is important to note this initial hurdle here. Finding appropriate work is fundamental to successful settlement and financial stability. Newcomers may encounter difficulties with foreign credential recognition. They might also lack Canadian work experience or professional networks. These early employment struggles can contribute to financial insecurity. This insecurity is then compounded by the high cost of living, especially for housing. In summary, the relationship between immigration and Canada's economy is complex and multifaceted. Immigration provides undeniable long-term benefits and is integral to Canada's future prosperity. However, the scale and pace of recent arrivals have presented significant short-term challenges. These challenges are most apparent in areas like housing affordability and the capacity of public services. The 2025 cost of living crisis is, in part, influenced by these integration pressures. Achieving a balance is key. Policies must support managed immigration levels that align with the country's ability to absorb new people. This includes investing in infrastructure and services to ensure successful integration for all. Many newcomers arrive in Canada with valuable skills and international qualifications. They often possess degrees, diplomas, and extensive professional experience gained in their home countries. These individuals are frequently highly motivated to contribute to the Canadian economy and build successful careers. Their aspirations are high, and they hope to find work that reflects their expertise. Canada's immigration system often selects candidates based on these skills. This is done with the expectation that they will fill gaps in the labor market. However, the reality upon arrival can be quite different from these expectations. The journey to meaningful employment is often longer and more complex than anticipated by many. Many find the initial period challenging as they navigate a new system. A significant hurdle for many skilled immigrants is the process of foreign credential recognition. Canadian employers and professional regulatory bodies may not immediately accept qualifications obtained outside Canada. This means that doctors, engineers, teachers, and other professionals can face lengthy and costly procedures. They might need to pass additional exams or undertake further education to practice in their fields. This process can be incredibly frustrating and financially draining for newcomers. It effectively creates a barrier to entry into their chosen professions. This delay in professional integration represents a loss of valuable time and talent for both the individual and the country. The system designed to ensure high standards can inadvertently hinder skilled contributions from those eager to work. Consequently, many highly skilled newcomers experience underemployment. This occurs when individuals take jobs that do not fully utilize their education or experience. For example, An engineer might end up working as a taxi driver to make ends meet. A doctor might find work in a call center or a retail position while awaiting licensing. These jobs are often lower paying and offer fewer opportunities for career advancement compared to their previous roles. While providing some income, they do not match the professional capabilities of the individual. Underemployment is a widespread issue among recent immigrants in Canada. It represents a significant waste of human capital and potential for the Canadian economy, which needs these skills. It also impacts the individual's sense of self-worth and professional identity. The individual consequences of underemployment are profound and far-reaching. Newcomers may experience considerable disappointment, persistent financial hardship, and a slowing of their overall integration process. Their inability to work in their field can lead to a de-skilling effect over time if their expertise is not applied. This makes it even harder to re-enter their profession later on in their settlement journey. For the Canadian economy, this underutilization of precious talent means lower national productivity. It also means reduced innovation and a less efficient labor market overall. Addressing underemployment is crucial, not only for the well-being of immigrants. It is also essential for maximizing Canada's economic potential and addressing widespread labor shortages in key sectors. Section 2. Competition and its effects on wage growth. The phenomenon of underemployment among skilled newcomers has a direct impact on other segments of the labor market. When highly qualified individuals are unable to secure jobs in their specialized fields, they often turn to more accessible employment options. This typically means seeking positions in lower-wage sectors of the economy. These sectors might include retail trade, food services, hospitality, general labor, or customer service roles. These jobs usually have lower barriers to entry and do not require specific Canadian credentials or extensive licensing processes. As a result, there is an increased supply of workers, many of whom are overqualified, competing for these roles. This influx fundamentally changes the competitive landscape within these important sectors of employment. This increased competition for lower-wage jobs can create significant challenges for all workers in these sectors. This includes Canadian-born individuals and previously settled immigrants who traditionally rely on these jobs for their livelihood. With more applicants vying for the same positions, employers may have less incentive to improve working conditions or benefits. They might also be less inclined to offer higher wages to attract or retain staff members. The bargaining power of individual workers can diminish considerably in such a crowded labor market environment. This makes it more difficult for those in lower-paying roles to see meaningful improvements in their compensation packages. The pressure is felt by everyone seeking employment or trying to advance in these crowded fields. This heightened competition significantly impacts overall wage growth, particularly at the lower end of the income scale. When there is an ample supply of labor available, wages tend to stagnate or grow very slowly across the board. Employers can often fill vacancies without needing to offer substantial pay increases to entice applicants. This suppression of wage growth in lower-wage sectors is a serious concern for economic equity. It directly contributes to the financial strain experienced by many Canadians, especially those with limited incomes. If wages do not keep pace with the rising cost of living, people's purchasing power erodes steadily. This makes it increasingly difficult for them to afford basic necessities like housing, food, and transportation. The connection between this labor market dynamic and the broader cost of living crisis is unmistakably clear. Many individuals and families rely heavily on income from these lower-wage jobs to survive and support themselves. If their earnings remain stagnant while prices for essential goods and services continue to escalate, they fall further behind financially. This can lead to increased personal debt, a greater reliance on social assistance programs, and heightened financial insecurity. The dream of economic stability and upward mobility becomes harder to achieve for a growing segment of the population. Therefore, understanding these complex labor market pressures is absolutely essential. Section 3. Productivity and the need for labor market alignment. The mismatch between the skills immigrants bring and the actual needs of the Canadian labor market has broader economic consequences. One of the most significant is its detrimental impact on overall national productivity. Economic productivity measures how efficiently goods and services are produced within an economy. When skilled individuals are underemployed, their full potential is not being harnessed effectively. An engineer working in a coffee shop, for instance, is not contributing their specialized engineering expertise to infrastructure or innovation. This represents a substantial loss of potential output and innovation for the entire economy. This widespread underutilization of valuable skills acts as a drag on Canada's productivity growth, which is vital for long-term prosperity. While some sectors of the economy experience an oversupply of labor due to underemployment, others may simultaneously face critical shortages. Certain high-skilled professions such as specialized healthcare roles or advanced technology positions might struggle to find qualified candidates. This can happen even when immigrants with relevant educational backgrounds and experience are present in the country. They may be unable to get licensed or find pathways into these roles. This paradox highlights a systemic problem in matching available talent with existing demand in the Canadian job market. The failure to integrate skilled immigrants effectively into their fields means that key industries may not grow as quickly as they otherwise could. This can hinder Canada's overall competitiveness on the global stage. The long-term implications of this persistent skills mismatch for Canada's economic development are considerable. If the country consistently fails to utilize the diverse talents of its entire workforce, including newcomers, national innovation may suffer. Economic specialization in high-value industries which drive growth could be significantly hampered. Businesses might be less inclined to invest in crucial research and development activities if they cannot find the necessary skilled personnel. This could lead to a slower transition towards a more knowledge-based and technologically advanced economy. Ultimately, this affects Canada's overall standard of living and its ability to compete effectively in an increasingly complex international arena. The problem goes beyond individual hardship. It touches the core of national economic destiny. Addressing these challenging labor market dynamics requires a comprehensive and multifaceted strategic approach from all stakeholders. There is a pressing need for better alignment between immigration selection policies and the actual evolving needs of the labor market. Streamlining and accelerating foreign credential recognition processes is crucial for the faster integration of skilled professionals into their respective fields. Investing in effective bridging programs and targeted skills upgrading initiatives can help newcomers adapt their existing expertise to the Canadian context. Furthermore, creating stronger incentives for businesses to hire, train, and retain skilled immigrants is also very important. Ensuring Canada can fully benefit from the skills of all its residents is paramount for a prosperous future. Section 1. Canada's GDP performance. A closer look at 2025. Gross domestic product, commonly known as GDP, is a vital measure of a country's economic health. It represents the total monetary or market value of all the finished goods and services produced within a country's borders in a specific time period. As a broad measure of overall domestic production, it functions as a comprehensive scorecard of a given country's economic activity. Understanding GDP trends is crucial for assessing how well the national economy is performing. For Canada in 2025, these figures provide important context for the ongoing cost of living crisis. The nation's economic output directly influences employment, income levels, and overall prosperity for its citizens. Canada's GDP growth is projected to be 1.8% for the year 2025. This figure indicates a modest expansion of the Canadian economy. It suggests that the economy is growing but not at a particularly rapid pace. This rate is an improvement over even slower growth periods but falls short of the more robust expansion seen in some previous years. Such moderate growth can have mixed implications for the average Canadian. While it might signal some new job creation and continued business activity, it may not be strong enough to significantly alleviate the financial pressures many are feeling. This level of growth requires careful monitoring and strategic economic management by policymakers. Several interconnected factors contribute to this projected GDP growth rate of 1.8%. Domestic consumer spending plays a significant role, but it can be dampened if households are struggling with high living costs. Business investment levels are another key driver. However, uncertainty about the economic outlook can make companies cautious about large expenditures. The housing market, a major component of the Canadian economy, also influences GDP through construction activity and related services. Furthermore, international trade and global economic conditions exert considerable influence on Canada's export-oriented industries. The interplay of these elements shapes the final GDP outcome for the year. the Bank of Canada has expressed specific concerns regarding the nation's GDP growth trajectory. One notable point of apprehension is the potential negative impact of reduced immigration levels on future economic expansion. Historically, immigration has contributed to Canada's labor force growth and has boosted overall domestic demand for goods and services. A slowdown in the rate of new arrivals, resulting from recent policy adjustments to immigration targets, could therefore constrain the economy's potential output. The bank watches these demographic shifts closely because a smaller workforce and slower population growth can translate directly into lower GDP growth figures over the medium to long term. Inflation is an economic term that describes a general increase in prices and a fall in the purchasing value of money. When inflation is high, each dollar buys a smaller quantity of goods and services. This directly impacts the cost of living, making everyday essentials like food, housing, and transportation more expensive. Even if the rate of inflation slows down, the higher price levels established during periods of significant inflation often remain. This sustained erosion of purchasing power is a central element of the current cost of living crisis. Canadians are finding that their hard-earned money simply does not stretch as far as it used to a few years ago, creating widespread financial strain. For 2025, inflation in Canada is expected to be around 2%. This rate aligns with the Bank of Canada's target range, which is typically between 1 and 3%. Achieving an inflation rate of 2% is generally considered a sign of price stability in the economy. It suggests that the aggressive measures taken to curb the high inflation experienced in previous years are having an effect. However, it is crucial to understand that a 2% inflation rate does not mean prices are decreasing. Instead, it signifies that prices are continuing to rise, albeit at a much slower and more predictable pace than before. This ongoing, albeit slower increase still adds pressure to household budgets already strained by past price hikes. The most critical issue for many Canadians is that the cost of living continues to rise, often outpacing any growth in their wages. While the overall inflation rate might be moderating, the prices of essential goods and services, particularly housing and food, have already reached very high levels. Simultaneously, wage growth for a large segment of the population has not kept pace with these cumulative price increases. This growing disparity between income and expenses is the crux of the financial hardship. Even if inflation is officially reported at 2%, if an individual's wages only increase by 1% or remain stagnant, their real purchasing power continues to decline, making them financially worse off. This widening gap between rising costs and stagnant wages disproportionately affects low and middle-income households. These households typically spend a larger percentage of their income on necessities, meaning they have less flexibility to absorb price increases. The struggle to afford basic needs like adequate shelter, nutritious food, and essential utilities becomes more acute. This situation can lead to an increase in household debt as people borrow to cover shortfalls. It can also mean a greater reliance on food banks and other social support systems. The cumulative effect is heightened financial anxiety and reduced economic security for a significant portion of the Canadian population, further deepening societal inequalities. The Bank of Canada plays a crucial role in steering the nation's economy. Its primary mandate is to promote the economic and financial welfare of Canada. This involves keeping inflation low, stable, and predictable, which it aims to achieve by setting a target inflation rate. The bank utilizes various monetary policy tools, with the most prominent being adjustments to its key policy interest rate. These interest rate decisions influence borrowing costs throughout the economy, affecting everything from mortgages to business loans. The bank's actions are therefore closely monitored by financial markets, businesses, and the general public, due to their far-reaching consequences on economic activity and financial conditions. As mentioned earlier, the Bank of Canada has voiced concerns about the potential negative impact of reduced immigration levels on future GDP growth. The reasoning behind this concern is tied to fundamental economic principles. A growing population partly fueled by immigration typically leads to an expansion of the labor force. More workers can produce more goods and services, thereby increasing the economy's potential output. Immigrants also contribute to domestic demand as consumers. Therefore, a significant slowdown in population growth, if immigration targets are substantially reduced, could lead to slower labor force expansion and potentially dampen overall economic activity. This presents a complex policy challenge. The Bank of Canada faces a delicate balancing act in the current economic climate. It must continue its efforts to control inflation, ensuring it remains within the target range. At the same time, it needs to be mindful of not stifling economic activity too much with overly restrictive policies. If monetary policy is too tight for too long, it could push the economy towards a recession, leading to job losses and reduced business activity. Conversely, if policy is loosened prematurely while underlying inflationary pressures persist, there is a risk of inflation re-accelerating. Navigating these competing priorities requires careful analysis of a wide array of economic data and global trends. Ultimately, the economic indicators such as GDP growth, inflation rates, and wage trends are not just abstract statistics. They reflect the tangible economic realities that shape the daily lives of Canadians across the country. The Bank of Canada's policies, formulated in response to these indicators, have direct consequences for employment opportunities, the affordability of goods and services, and overall financial well-being. Understanding these key economic measures and the central bank's perspective is essential for comprehending the depth and complexity of Canada's 2025 cost of living crisis. It also highlights the significant challenges that policymakers and citizens alike face in striving for a more stable and prosperous economic future. Canada operates as a prominent trading nation within a highly interconnected global economy. The country's economic prosperity is significantly tied to its relationships with international markets. Goods and services flow across its borders daily, linking Canadian businesses and consumers to the wider world. This deep integration means that global events, even those occurring in distant countries, can have substantial ripple effects here at home. Economic shifts in major partner nations or disruptions to international norms inevitably influence Canada's financial landscape. Understanding this interconnectedness is therefore crucial. It helps to explain why external factors play such a key role in shaping domestic economic conditions, including the current cost of living challenges faced by many Canadians in 2025. The global economic environment in recent years has been characterized by considerable uncertainty. Various international events contribute to this atmosphere of instability. These can include geopolitical conflicts in different regions which disrupt trade routes and create investor anxiety. Lingering effects from global health crises can also continue to impact supply chains and labor availability. Furthermore, significant policy changes or economic slowdowns in major economies, such as the United States, China, or the European Union, inevitably send shockwaves throughout the global system. This volatility creates a challenging backdrop for Canadian businesses trying to plan for the future. It also influences consumer confidence, potentially leading to more cautious spending habits. This makes economic forecasting more difficult for policymakers. Disruptions to global supply chains have become a particularly notable feature of the recent economic landscape. These intricate networks, which move raw materials, components, and finished products around the world, are vital for modern economies. When these chains are broken or strained, the consequences are felt widely. Canadian businesses may struggle to source necessary inputs for their production processes. This can lead to delays, reduced output, and higher operational costs for many companies. These increased costs are often passed on to consumers in the form of higher prices for goods. This directly contributes to the rising cost of living. The challenge of securing reliable and affordable supplies remains a significant concern for many sectors across Canada. Canada is also a major exporter of natural resources, including oil, natural gas, minerals, and agricultural products. The prices for these commodities are determined in global markets, subject to international supply and demand dynamics. Fluctuations in these global commodity prices can therefore have a very direct and significant impact on the Canadian economy. When prices for key exports are high, it can boost national income and government revenues. However, when these prices fall, it can lead to reduced export earnings and economic slowdowns, particularly in resource-dependent regions. This inherent volatility in commodity markets adds another layer of uncertainty to Canada's economic performance. It affects employment levels in these sectors and can influence the overall value of the Canadian dollar. The global trading environment has faced increasing challenges due to rising trade tensions and protectionist measures. Protectionism occurs when countries try to shield their domestic industries from foreign competition. This is often done through policies like tariffs, quotas, or other barriers to trade. When major economic powers engage in trade disputes, it creates significant instability in international markets. Canada, with its heavy reliance on international trade for economic growth, is particularly vulnerable to these kinds of global frictions. Such disputes can disrupt long-established trade relationships and supply chains. They also make it more difficult for Canadian businesses to access foreign markets or source imported goods reliably and affordably, causing widespread economic concern. Tariffs are essentially taxes imposed on goods when they are imported into a country. When other nations impose tariffs on Canadian exports, it makes those Canadian products more expensive for foreign buyers. This can reduce their competitiveness in international markets, leading to a decline in export sales for Canadian businesses. Fewer sales can mean lower profits, reduced production, and potentially job losses in the affected industries. Conversely, if Canada imposes tariffs on goods imported from other countries, it can increase costs for Canadian consumers. It also raises expenses for Canadian businesses that rely on those imported materials or components for their own operations. This directly adds to inflationary pressures and the cost of living. The United States remains Canada's largest and most important trading partner by a significant margin. Therefore, any trade friction with the U.S. can have particularly severe consequences for the Canadian economy. In recent years, there have been instances of U.S. tariffs being placed on key Canadian exports. These have included important industries such as softwood lumber, steel, and aluminum. Such tariffs can hit specific Canadian sectors very hard, leading to reduced profitability and employment in those areas. The uncertainty created by these trade actions can also discourage investment in affected industries. Resolving these trade disputes amicably and ensuring smooth cross-border commerce is vital for Canada's economic health. Beyond the immediate impact on targeted industries, widespread trade tensions and tariffs create a broader climate of economic uncertainty. This general uncertainty can discourage businesses from making new investments or expanding their operations, even if they are not directly affected by specific tariffs. Companies become more cautious when the rules of international trade seem unpredictable. This can also negatively affect consumer confidence, leading to reduced household spending, which further dampens economic activity. The cumulative effect of these global trade challenges is a drag on overall economic growth. This can make it more difficult for Canada to address domestic issues like the cost of living crisis. The 2025 cost of living crisis in Canada is a significant national concern. This essay has thoroughly explored its many complex dimensions across several detailed parts. It is abundantly clear that this situation is not a simple problem with a single, easily identifiable cause. Instead, the financial strain experienced by many Canadians arises from a confluence of various interconnected pressures. These pressures profoundly affect individuals, families, and diverse communities throughout the nation. Understanding these intricate layers, as we have endeavored to do, is the essential first step. It is only through such understanding that we can begin to formulate meaningful and effective solutions. The financial well-being of countless Canadians currently hangs in the balance. This comprehensive examination has aimed to shed much-needed light on these pressing economic realities. The challenges are indeed substantial, requiring careful consideration and decisive, thoughtful action from all stakeholders involved. Domestically, several critical factors have been identified as major contributors to the widespread financial strain. The cost of living in Canada's major urban centers, for example, remains exceptionally high for many residents. Housing, and particularly the relentlessly escalating cost of rent, consumes a disproportionately large share of average household incomes. Cities such as Toronto, Vancouver, and even Calgary, as we have seen, exemplify these acute affordability challenges. Population growth, partly driven by significant levels of immigration and the influx of international students, has naturally intensified demand. This increased demand has placed further considerable pressure on an already strained housing supply across the country. Furthermore, various labor market dynamics present additional, formidable hurdles for many individuals, both newcomers and long-term residents alike. The underemployment of skilled newcomers regrettably persists as a significant and wasteful issue. This, in turn, contributes directly to increased competition for lower-wage jobs, thereby negatively affecting overall wage growth. Beyond these purely domestic concerns, broader macroeconomic indicators paint a rather complex and challenging picture for 2025. Canada's gross domestic product, or GDP, is projected to experience only modest growth during this period. While the rate of inflation has fortunately moderated to around the Bank of Canada's target of 2%, this development offers only limited relief to struggling households. The cumulative and heavy impact of past significant price increases continues to burden household budgets quite significantly. Most crucially, wage growth for a large segment of the Canadian population has unfortunately not kept pace with these relentlessly rising costs of essential goods and services. This persistent disparity creates an ever-widening and concerning gap between average earnings and necessary daily expenses. On the global stage, Canada's economy remains deeply interconnected with international markets and is thus inherently vulnerable to external shocks and trends. International economic uncertainties, persistent global supply chain disruptions, and ongoing trade tensions also play a very influential role in this situation. The combined and cumulative effect of these diverse domestic and international factors creates a challenging economic environment. This environment directly and negatively impacts the daily lives and future prospects of countless Canadians from all walks of life. The cherished dream of achieving lasting financial security seems increasingly distant and unattainable for many individuals and families. Simply building adequate savings, investing for a secure future, or even managing routine monthly bills becomes a significant ongoing struggle. The critical issues of housing affordability and widespread income stagnation are particularly central to this pervasive crisis. They affect not only the material economic well-being of citizens, but also broader social cohesion and individual opportunities for advancement. This essay has endeavored to unpack these multifaceted realities comprehensively and clearly. Recognizing the complex, interconnected nature of this crisis is absolutely essential for developing effective and sustainable responses. The overall well-being of the nation truly depends on addressing these deep-seated challenges head-on with urgency and resolve. Acknowledging the considerable depth and significant breadth of Canada's 2025 cost of living crisis is indeed vital. However, thoroughly understanding the complex array of problems is only the initial phase of a much longer and more demanding journey. The subsequent and arguably more critical step involves actively forging effective, equitable, and sustainable solutions. Addressing these multifaceted challenges successfully will require comprehensive policy responses. It will also demand diligent, forward-thinking strategic planning from all levels of governance. It must be recognized that there are no quick fixes or overly simplistic answers to such deeply embedded economic issues. Instead, a concerted and collaborative effort from governments, the private sector, and civil society organizations is absolutely essential. This collaborative path will necessitate innovative thinking, bold action, and an unwavering commitment to nurturing Canada's long-term economic health and stability. The ultimate goal must be to build a more resilient, inclusive, and equitable economy that benefits all Canadians. A primary area that demands urgent and sustained attention is the persistent and worsening housing crisis. National policies must focus far more aggressively on substantially increasing the supply of diverse housing options across the country. This includes a significant expansion of purpose-built rental accommodations and truly affordable housing units. It also means developing accessible pathways to homeownership for more Canadians, particularly young families and first-time buyers. Streamlining lengthy approval processes for new construction projects can help to accelerate much-needed development. Investing strategically in innovative building technologies and promoting sustainable urban planning practices is also crucial for long-term success. Furthermore, carefully considered strategies to curb excessive speculative investment in the housing market might prove beneficial. Addressing the pressing issue of homelessness and providing adequate, compassionate support for vulnerable populations must remain a paramount priority within any housing strategy. A multifaceted approach to housing can help alleviate the immense pressure currently experienced in many urban centers. Simultaneously, robust efforts must target persistent labor market imbalances and actively promote fair and sustainable income growth. Improving the often cumbersome and slow processes for recognizing foreign credentials can help skilled newcomers integrate more quickly into the workforce. This would allow them to contribute their valuable expertise to the Canadian economy much more effectively and rapidly. Investing public funds in targeted skills training and practical retraining programs can help to better align workers' diverse abilities with current and future market needs. Policies that actively support collective bargaining rights and ensure fair, livable minimum wages are also critically important. These measures can help to ensure that wages for working Canadians begin to keep pace with the actual cost of living. Consideration should also be given to significantly strengthening Canada's social safety net. This includes enhancing programs that provide essential support to low-income individuals, struggling families, and vulnerable seniors. Such initiatives can offer a crucial buffer against severe economic hardship. Ultimately, successfully navigating Canada's current economic challenges demands robust, flexible, and adaptive strategic planning. This involves the continuous and careful monitoring of key economic indicators, both domestically and globally. Policymakers must be fully prepared to adjust their strategies thoughtfully as circumstances inevitably evolve over time. Fostering a culture of innovation and enhancing competitiveness across all Canadian industries will significantly bolster long-term economic strength and resilience. Investing proactively in critical public infrastructure such as efficient transportation networks and modern digital connectivity supports sustainable growth. Meaningful international cooperation and active diplomatic engagement are also vital for managing complex global economic pressures effectively. By addressing these intricate issues with unwavering determination and a clear shared vision, Canada can indeed forge a path toward a brighter future. The overarching aim is to create a more stable, truly affordable, and genuinely prosperous future for all its citizens, present and future.